Hey everybody, welcome back to Whiteboard Finance. In today's video, I wanna show you how I'll be investing for 2025. So I'm gonna give you a big breakdown here. I usually don't have stuff on this side of the whiteboard, but it's gonna be there the whole video, and I'll give you more information on this side as we go. But basically, it's the end of the year, holidays are starting, so I wanna give you guys a perspective of how I'm looking at things and how I'll be investing my money in 2025 and moving forward. Stay tuned. Okay, so let me start this video by breaking down the things that I'll be investing in by asset class, and then we'll break down each asset class as we go. So if this is a pie, I've given this analogy 8 million times throughout the 7-8 years that I've been on YouTube. Basically, you want your pie to be representative of your net worth. Think of it like a pizza, think of it like an actual pie. Each slice is an asset class, and each asset class, you give a percentage or a weight in your portfolio. So say for easy numbers, your net worth is $100,000, you want a certain percentage allocated to each asset. That way you know if you're overweight or underweight, and you can rebalance much easier that way. So with this, let's start with stocks. So I want stocks to be basically a third of my net worth. So we're shooting for 33%, and again, I'll break that down as we go throughout the video. Next is real estate, another third, 33%. It's been a great inflation hedge over basically the last 100 years or so. And then we have Bitcoin at 15%, cash at 15%, and then we have precious metals and collectibles at 4%. So now that you understand the big bird's eye view of how I'm investing by asset class, let's break these down. Okay, so let's break down the stocks portion of my investment plan for 2025. So if you guys know me, first and foremost, I'm typically a dollar cost average investor. So if you don't know what dollar cost averaging is, it's basically just investing a certain amount of money at a certain interval for an extended period of time. So as we both know, the market goes up and down, and you wanna end up somewhere in the middle if you dollar cost average, hoping that the chart goes up and to the right, as it has done in the past. So what I'm doing right now is to break down my biggest position. I'm not gonna share every single thing that I invest in, but just so you know, VTI, which is Vanguard's total stock market fund, is basically 53% of every single one of my portfolios, okay? So out of everything that I hold, VTI makes up more than half of it. The thing that I do wanna highlight though is small cap and mid cap, but specifically small cap value. So I've been buying AVUV for a number of years now, and it's done very well for me. So the reason for that is because if you look at this chart right here, you can see that small cap has actually outperformed mid cap and also the S&P 500. You can take a look at that because for nearly 2 years, market leadership has typically been dominated by the Magnificent Seven. If you look at any fund like a VTI or the S&P 500 or any of these big funds that buy mega cap companies, they're all dominated by the biggest market cap because they're weighted towards market cap. So market cap is simply just the stock price times the shares outstanding, and that gives you the market cap or the entire value of the company. So if you look at any of these funds like VTI, for example, they're just loaded by the Magnificent Seven. These are your Googles, Metas, Teslas, things like that. NVIDIA, for example. So what I wanna do is I wanna load up a little bit more on small cap and small cap value just because they simply have much more upside to run, in my humble opinion. And then also what I'm doing is, and if you guys don't know my investment philosophy, it's typically more like a barbell philosophy. So on one end of the barbell, you have super conservative investments. That's why we have cash right here, and then really nothing in the middle, and then super risky stuff on the other side, which is why we have Bitcoin, and then the next thing I'm gonna talk about right now. So I actually bought a couple weeks ago a MicroStrategy December 19th, 2025 call option. I paid $19,100 for that one contract. If you don't know what options contracts are, they allow you to control 100 shares of the underlying asset. So my strike price is 400 and my break even is 591 a share. And we have about 365 days to get there, okay? So that's kind of my more risky equity position. And then I still have your usual suspects. I still hold a bunch of SCHD. It's one of the biggest holdings in my portfolio. I have a little bit of SPY in my Roth and things like that. So with all that being said, that's pretty much how I'm going to continue investing into 2025. It's gonna be dollar cost averaging into my core holdings such as VTI, AVUV, SCHD, with a little bit more spiciness on the craps table of MicroStrategy. So that's either gonna age like a fine Montenegrin wine, or it's gonna age like milk. And you guys know me, I've always been transparent with you, so I'll let you know. Okay, so number 2 is real estate. So this is supposed to be 33% of my pie. If you can see right here, 33%. Realistically, it's about 31% at the time of this recording, so I'm basically right on track. That's the beauty of weighing your asset classes. You know exactly where you stand and you can rebalance at any time. With real estate, it's a little bit harder because my house is paid off, so I do have a lot of equity in my home, other than property taxes and bills and maintenance, which never go away. Don't you just love home ownership? So even with the paid off house, you're just renting from your municipality in the form of property taxes. That will never go away. Stop paying your property taxes and see who really owns your house. But on a side note, my house is paid off. The reason I did that is because I went into psycho dad mode. I have 2 kids. I don't want any debt. Mathematically, it was dumb. Financially and peace of mind, it's fine because it allows me to be more risky in these other areas of my pie, right? When you're taking on a mortgage or low fixed rate debt, you are effectively making a hedge against the US dollar, okay? You're saying, hey, I'm gonna borrow as much money on year 0 as possible and pay it off over time when inflation is paying off my debt for me, right? So you can do the calculator. I have a home affordability spreadsheet if you're interested. You'll see how much you can pay in interest over the lifetime of the loan, but if you're keeping up with inflation, which real estate has historically done, you should be good. That's the reason why I paid off my house. For me, it's just a glorified savings account, and it's a place that I live and raise a family. It's not an investment. So if you wanna do investments, you have REITs and you have rentals, right? So I still buy VNQ, I dollar cost average into it. It's done very poorly just because the interest rate environment that we're in has been absolutely insane. It's super high. So when rates are high, it's typically not good for real estate developers or commercial real estate in general. So keep that in mind. That's an option if you wanna track an ETF of REITs, okay? Rentals. So I don't see myself buying a rental in 2025. I already went down that rabbit hole many years ago. We bought a defunct development back from PNC for just over $1 million when I worked in commercial real estate. The builder basically went belly up in 07, 08, had hundreds of unfinished lots, and we basically started building spec homes. We were selling single family homes. We were building duplexes to rent out. We did all that stuff, okay? We got rid of all those in about 2016, 2017. Obviously too early, but still made money. It is what it is. So for me personally, I don't see a rental property being on the cards, so I'm not going to be doing that for 2025. But again, my net worth between my home equity and all the other real estate proxies that I own, I'm pretty much happy with where I sit at 31% of my net worth. Okay, so moving on to number 3, cash. Cash is 15% of my net worth. At the time of this recording, it's about 13%. So right on track there as well. So where's my cash going right now? So in Robinhood Gold, I'm earning 4.25%. I have some in M1 Finance earning 4%. And then also Capital One, who I've been with for years, 3.8%. Obviously the rate cuts have affected that. This used to be at like 5, this was 5, and this was like 4.5 or 4 and some change. So T-bills right now are currently yielding 4.3%. I don't see myself buying T-bills. The reason for that is because you're locking your money up for a period of time. Yes, you can trade T-bills, but that kind of defeats the purpose of them. So even after tax and stuff like that, you're not really earning 4.3%. After tax on these, you're not really earning these rates either. That's why I wanted to talk about municipal bonds. So if you're in the highest tax bracket, municipal bonds are similar. They have similar rates as T-bills and some of the other solutions out there like CDs and bonds and things like that. But they typically pay interest income that is exempt from federal taxes. So they may also be exempt from like state income taxes if purchased from the home state. So if you're in a high tax bracket, just the tax savings alone is gonna juice these municipal bond rates up to like 6 or 7% at the time of this recording. You have to realize you're paying taxes, you're paying 1099 interest on all these right here. So you're not really yielding that rate. So when you look at inflation and you look at municipal bonds, for the people that are in the higher tax bracket watching this video, that could be an option for you. I was at the barber shop the other day, sitting next to an old commercial real estate investor that I know. He's just casually pulling up his Fidelity account, and it had a couple commas in there, okay? And there's some numbers before the first comma, right? Indicating, decamillionaire. So we got to talking and he said, most of my stuff is just in real estate and municipal bonds. So that's something you may want to look into if you're in a higher tax bracket. Okay, so number 4 is everybody's favorite, Bitcoin. So Bitcoin right now, the target has always been 15% of my net worth for years, but right now I'm actually overweight at 22% of my net worth. If you count the MicroStrategy that I hold and some other Bitcoin proxies or Bitcoin related equities, it's actually higher than 22%. So I'm just dollar cost averaging. I'm never selling, okay? The reason I'm never selling, because to me, this is something that is, how do I explain this? It's either generational wealth or significantly less than what I own it for, right? There's no in between. It's just a huge asymmetric bet, and I don't need the fiat right now. I don't need the fiat US dollars at this point. So I'm just holding on to it. It's up about 125% year to date if you've been paying attention. If you haven't watched my many YouTube videos, you may want to check out the last one I did in my $100,000 Bitcoin journey. Those have all the books you need to know to read about Bitcoin if you still don't understand it yet. So the reason why I'm not selling is basically because there's too many positive catalysts right now when it comes to government and things like that. So essentially, in a nutshell, for the sake of this video, all the headwinds have become tailwinds, in my opinion. So I personally use River. This is not a sponsored video. If you want to get some Bitcoin from River, check out the link below. I dollar cost average literally every day. I buy Bitcoin literally every day, and I smash buy it on the dips. I had limit orders down to $10,000 when Bitcoin was trading at 16K, okay? It's close to $100,000 right now. So it's just one of those things that you have to study. If you don't get it, you think I'm an idiot. If you get it, it's the smartest thing on this list. Okay, so number 5 is precious metals and collectibles. So precious metals and collectibles, I shoot for about 4% of my net worth. Right now, if I had to guess, it's probably somewhere around maybe 1.5% to 2%. I would like to start increasing my gold stack. So this is not all of my gold, just because I don't want to bring it down here. But these are gold ounces, gold ounce coins that I bought from JM Bullion. If you guys are looking for a place to buy precious metals, which I'm going to talk about more here, check out JM Bullion. I've been buying from them for years. Look, you can see all these receipts. I've been buying from them for 8, 9, 10 years now at least. So basically, when you look at precious metals, it's a good hedge against inflation. Gold is actually trading at all-time highs right now as we speak. And the reason for that is because of monetary debasement. The governments are printing fiat currency like crazy. Why do you think Bitcoin's exploding? Why do you think precious metals are exploding? Why do you think I even have this as part of my net worth? So check out JM Bullion if you haven't. They're beautiful, and you can pass them down to your kids or grandkids one day. Also, if you check out other types of collectibles, you have trading cards, right? You got LeBron James rookie, Kobe Bryant rookie, Giannis Antetokounmpo rookie, Luka Doncic rookie. Should have bought a Nikola Jokic rookie, but that's a conversation for a different video. Best center of all time. A lot of people are not gonna like that, but it is what it is. So some people buy trading cards, some people buy Pokemon cards, some people buy precious metals, cars, watches. Some watches increase with value over time. Cars do increase with value over time. I know a lot of listeners probably don't wanna hear that, but if it's not your daily driver and it's an internal combustion engine 911 stick shift Porsche, it's gonna go up in value, trust me. Especially with self-driving, electrical vehicles, government mandates, people are gonna pay out the nose 20, 30, 40 years from now for a stick shift internal combustion engine sports car, trust me. Sold all my silver. Here's a tweet from 2020 saying me ready to unload my physical silver, July of 2020. And here's July of 2024, selling 100 ounces of silver at $31 an ounce, put it straight back into Bitcoin. Silver stagnating, Bitcoin went through the moon, right? Great trade. So with all this being said, I appreciate you guys watching. I wanna give you my thoughts. Stay tuned right now. Okay, so let's get into my thoughts. So some people say diversification is diversification. Some people are saying, why wouldn't I just keep investing in XYZ that has done very well for me over the years? And I actually agree to that to an extent. So if you're a business owner or if you're someone who runs a specialty, say you're the world's best woodworker, the world's best metal worker, the world's best auto mechanic, the world's best restaurateur, right? Or commercial real estate investor, doesn't matter. Yes, you probably should have all your eggs in one basket, okay? I'll be honest there, because the ROI that you're gonna get from running a profitable business is probably gonna beat any of this right here. What I'm trying to help you do is if you are someone who's just, you know, earning US dollars in a job or earning a wage or a salary worker, someone who just wants to invest soundly and not have to worry about side hustles, driving for Uber, doing all these million things that you don't wanna do, this is probably a good way to go, right? So for me, diversification actually leads to this, sleep well at night, so SWAN. I sleep well at night knowing that if any of these assets went to zero, I'm not gonna go jump off a building, right? I saw so many people after 07, 08 that literally drank themselves to death, jumped off their own buildings, killed themselves. You see it happen all the time. People blow up their portfolios, their real estate goes belly up, and that was their whole life and their whole identity was tied to that one thing, okay? Is it really worth it? No. So I'm not trying to be morbid or weird, but it's true. Some people are so obsessed with money and what money brings them and the allure and, you know, the prestige and their ego and all that stuff that they end up killing themselves over what? Some digital pixels on a screen, right? It's not worth it. So with me, I sleep well at night. If Bitcoin goes to zero, great. There goes 22% of my net worth, I don't care. Stocks go to zero, great, doesn't matter. Real estate zero, great, doesn't matter. I don't care. I'm not that invested in any one of these things where if someone comes and steals this gold, no big deal, okay, whatever. Life's too precious to tie yourself to a monetary amount. And then barbell. So the reason I wanna bring up barbell is because some people think, oh, you're crazy, this is way too much of your net worth in Bitcoin. Oh, you're crazy, this is way too much of your net worth in cash. This isn't risky enough, this is too risky, this is whatever. It doesn't matter. So for me, I think that the irony is that Bitcoin is gonna move from the risky side of the barbell and the volatile side of the barbell to actually one of the safer things in the future. That may or may not happen. You may think I'm crazy, but I don't think I am. So the barbell for me is kind of how I live my life. So my wife has a W-2 job. She does well for herself, but she also has time to raise our kids, and she also provides the health insurance and does all that stuff. So she's the stability. I'm an entrepreneur. I run a couple businesses. My income is like this. It's all over the place. However, we're hitting singles, doubles, triples, in the park home runs, grand slams, and then hers is singles and doubles like this, right? So we have a foundation and a base. So that's why I barbell invest. That's why I have a sleep well at night portfolio, and that's why I diversify. And if my lifestyle or outlook on life is similar to yours, maybe you should give this allocation a try. But again, this is not financial advice. I'm just a random guy on YouTube, don't listen to me. I haven't been studying money and geopolitics for 19 years. I have no idea what Bitcoin is. I'm just talking out of my rear end. Thank you so much for watching and have a prosperous day. All right, so all joking aside, I don't think these LeBron rookie cards are gonna do well. I hope I'm wrong, just because the NBA is in the crapper right now. If you look at the ratings and viewership, it is absolutely decimated over the last couple of years. That's because the league is boring. All these kids are just shooting threes. There's no mid-range game. I grew up in the best era of basketball. Give me Iverson, Kobe, Tracy McGrady, Vince Carter, Shaq. Give me all of them in their prime, baby. The new NBA is so boring.